Today on the Traders Workshop, automation and advisory, leveraging trading bots. All this and more right after the bell. I think it's going to go up. It's going to go up. See it here going up?
Oh, yeah.
Yeah. Much better.
I love it. I'm so pumped to rock right now.
So it's better. Starts low and fades in, right? I like that better. Cool. How are you, Mark?
I'm good. We're making improvements every week with this show.
I know, no doubt. So here's the deal. No Jason today. Sorry, all Jason's fans. He is, can't remember what he's doing, but he's doing something.
On his way to the great north, to Toronto.
Oh, right. He's on a trip to Toronto. I don't know if it's a family trip or what, but he is on the road. So, nevertheless, Mark and I are going to kind of bring in some market-making details maybe today, along with something that's near and dear to your heart, newly near and dear to your heart, which are these trading bots, right? So, just so everyone knows real quick, Mark's Mr. Advisor. That means he's registered. I can say that, right?
You can absolutely say that.
Okay. So he's safe as far as we know.
Look me up on FINRA. It's all there.
Yeah, it's all there. So Mark is going to embark on this new kind of strategy, I think. Maybe that's not the right word. I'll let you explain it in a second. Using bots in his advisory business in a unique way. So you, as a client of Mark's, will have access to these bots, under Mark's guidance, I think. So I'm not going to talk anymore. You tell me what the deal is.
Yeah, no, you're exactly right there, Lex. And the only thing I'll disagree is, and this is where we get to chop it up with some good old stories, maybe. But it's new, yes, in how I'm doing it right now. But really, this blend of man and machine is something I've done for my entire career in options, and you've done it for your entire career in options, right?
Yep.
There's very much a human element that's picking your stocks, interacting in open outcry, deciding how to do, a lot of that stuff that a computer doesn't do. But bots are great for updating your orders, executing stuff, getting you into trades, getting you out of trades. So that man and machine combination, I think, is something that's as old as trading itself.
Yeah, no, I agree. You weren't around in the early days like I was on the floor, so I think you were a little bit later than me, right? If I'm not mistaken.
Yeah, I went onto the floor in 2005.
Okay, so I was down in 87, so that's a big difference. So, just to be clear, there was no such thing as a computer on the trading floor when I started. It was you scribble on the back of a card, a trading card, right? And you kept your deltas and your gamma and everything by hand. So you scribbled the whole way through. Now, as we progressed from 87 to where when you came on, we were well into computers and automation by that point. So it did evolve, and it evolved quickly.
I believe the first sort of exchange auto, SIBO hybrid, was early 2000s.
Yeah.
2003 or 4 maybe.
Yep, for sure.
That sort of you had that order book that was electronic, sort of, but it still got processed by a DPM. Yeah. We had Ante on the Amex that was the same sort of thing, and you send away orders that were sort of electronic, but they still got fed to a crowd.
Yeah, and our firm developed. Well, we helped co-develop one of the newer versions of computers on the floor. It was a little bitty, clunky Hewlett-Packard handheld. It folded open. It was as big as a book. And we thought we were cool. It was the first wave of automation. It wasn't automated at all. You had to punch things in, but at least it did it for you, right? The computer.
Yep.
So we biddled back then. It's called Biddle or something like that, but it was kind of fun. So here we are today, right? And we're talking about trading bots and automation. Now, this is a completely different era and ball game, right? So tell us a little bit.
So now it's come off the exchange floor, and the bots are accessible to retail. And there are a number of, ways that retail traders can access the markets algorithmically. I know you have some tools built into TradeHawk, but the partner of both of ours that you've been kind of hinting about is PeakBot. And they've developed a suite of pretty incredible bots, frankly, for getting in and out of options positions and following, systematic strategies. But the catch is they kind of need to be hand managed. And you can do that yourself, but that's where the advisor comes in. And so that's the partnership that I'm launching here with PeakBot, is that I, as the advisor, can make stock selections, can build portfolios. You get your iron condors running over here. You have your wheel running here with some names and, drop in some trend spread, and you build kind of custom bot portfolios for each individual risk tolerance, that we go through as an advisor relationship. But then you hand it off to the bots to handle the actual trading and implementation of that strategy.
Wow. That's pretty cool. So you mentioned a few strategies. I know you use them as examples, but maybe things you use. You mentioned the wheel. You mentioned iron condors, straight stock picking as well. Well, each of these accounts will have a little different flavor, I'm assuming, right? Not everyone is going to be set up or geared to the wheel, for instance, or necessarily short iron condors, for instance. It's not going to be a one size fits all. Is that right?
Correct. There are a number of different models for different risk tolerances. And of course we can take in, individual sort of customizations too. That's the power of machines, is they allow you to do a lot of different things. So
right.
Essentially we have 3 core strategies that are a trend strategy, a wheel strategy, and an iron condor strategy.
Okay.
So that customization takes place both on the allocation amongst those, what percent is in iron condors, but then also which stocks are chosen. Running the wheel on Coinbase, for example, is going to be a lot more choppy experience, probably higher P&L, some higher at the money vol, or I should say higher options premium collected. But that's going to be a different experience than running it on Bank of America. So you can still have the same strategy, but the issue selection also makes a difference for sort of the risk tolerance and kind of return profile that you're looking for.
Right. Okay. Interesting. Try to express, I'm putting you on the spot here a little bit, how big of a deal this is. And what I mean by that, I'm not talking about money, but how just, eureka this deal is using bots now. And I have to imagine it makes your life a lot easier in one respect, but you also, I want to, get it across to folks that just because you have a bot doesn't mean you stop thinking as a human, right? You need to use your mind and your skills to actually program the bot. That's kind of critical, I think, right? Tell us a little bit about it.
So like bot development and the software development is its own thing. And I think I think of it as like a big gradient. And at one end of the extreme, there's something that like only a human can do.
Yep.
And then at the other end of the extreme, do you need to update your options price like every time the stock ticks? No, that's perfect for a computer to recalculate what that should be. Or, do you want to close for a nickel? Well, have the computer automatically put out an order. That's very easy. You don't have to be there. So you let gradually increasing, parts of that job or that operation to, automate, and you automate what you can. And then you reserve your focus for understanding why, B. Riley Financial might not be the best wheel strategy because of something qualitative about the company, even if all the indicators are saying jump in here. So, that's what requires the human brain to say, that's real opportunity that smells good, or, that doesn't pass my spidey sense.
Right. Got it. Very cool. So will there be, how important is it for you, affecting these strategies to have good theoreticals? Is that even important really? Or is it more of a, hey, I like this, I'm in? Or do you look at theoreticals at all? And the reason I ask is because my feeling is that, all the retail folks that I interact with, on a regular basis, I don't think there's a lot of theoretical sense or in their view, a need for it. For me, I like to know theoretically what things are worth. That's important to me. Is there a theoretical, basis here, do you think, for you, or among other things?
I would say I don't think about theoreticals is kind of wrong, because I would say from a retail perspective, you need to think about your theoretical edge or whatever that might be in a different dimension, right? Mm-hmm. Like as buy side, there's tons of liquidity out there. I trust all these fancy Chicago guys to run their computers to figure out exactly what the price of that option should be. Like, I'm an efficient markets guy in that perspective, right? Yep. That like the price of Apple implied volatility is significantly better than anything I can come up with on my own. So I'm going to trust the market. I believe in that broadly. where I think my edge in trading SPY iron condors on a daily basis. That's something I like to keep as sort of a regular allocation. Maybe I'll pause it for, Jerome Powell speaking, or you think it's going to be a big CPI day or whatever. So,
Sure.
you kind of have that manual on off that you might want to include with that. But for the most part, I like staying systematically exposed to that premium, adjusting deltas, adjusting my spread width, based on the width between the legs based on vol levels and stuff like that. But staying exposed to that consistently because I believe my theo is that there's positive risk premium in that, right? Like I think about my theo in that sense. I think that if I do it in SPY, I should collect approximately 3 clicks of VRP, which is, a nickel out of these every week or a dime out of these every week.
Yep. Okay. Makes sense. So will you use the bot setup for the whole portfolio, more or less? I mean, is it going to be bots only sort of deal? How would you describe that?
Yeah, like for this specific portfolio allocation, it will be an entirely bot driven portfolio. Now, taking like a step back from like a big investment allocation perspective, this shouldn't be 100% of your allocation.
Sure.
This is more sort of like alternative, higher risk, premium capture type strategy.
Right.
If you want to use options on the other stuff, that's more the, I have some automated covered call or automated like portfolio hedge strategies that, are a different dimension. But the peak bots in particular are short-term premium collection driven bots.
Okay. Got it. Interesting.
So like I might be running an iron condor strategy for a long time, but that's trading every day. Or the wheel, you might stay in Bank of America for 3 or 4 months, but that's trading every week on that.
Yeah. So for this iron condor strategy, will you be using SPX, like the 0DTE gang, or what do you think?
Yes, that like SPY or SPX, like I think indices in general, like that's where I believe that theoretical, the iron condor premium exists. I much prefer them to individual equities. Not financial advice, but if you do want financial advice about that, contact me. But yeah, and to your point, SPX I think better than SPY if you've got the account size. And going after not quite 0DTE, but short dated in the sense that like, today it's 10:15, in an hour and 15 or an hour and 45 minutes, I will whack tomorrow's expiry in SPX.
Yeah. So I think there's, since you brought it up, it made me think of something. I think there is some sort of, I don't know, I don't want to say the word science, but I'll just say it anyway. There's some sort of science to the timing of when you enter these trades. And whether it's leaping a day or 2 days, or even in the 0DTE part of it, the people I'm paying attention to who do this well, there seems to be times of day that are optimal for getting into these things and probably getting out too. Do you feel that's somewhat true?
Yeah, I mean, I like the noon initiation. Like, I think the midday initiation is good. Trading something right on the open is really hard, right?
Really
hard. 30 minutes, you got to let that settle a little bit. But, I tend to think, and this is based on gut feel, but like, usually by noon, the market's relatively settled. We always get afternoon swings or this, that, or the other thing will happen. But by noon, you've had, some decent pricing and news has been digested.
Sure. Yeah, and don't forget, I tell the retail folks that as well. The market making community on the other side, right? The opening for them is a little price discovery. And some of the more liquid things, depending on which way, price discovery falls, they're setting curves and moving things around based on their inventory, things they need to clean up. That happens in the morning, like you said, up until let's call it 10, 11 Eastern, somewhere around that. Then we have that drift in the middle of the day, unless, of course, there's news or FOMC, that sort of thing. Then you get the drift. And then you get the last hour-ish, hour and a half of the day. What are the market-making communities doing again? Probably cleaning up their day, tidying it up for the overnight, making sure it's all sealed and delivered as they see fit.
And it's not just the options market makers, it's every asset class that percolates through there. You're getting equities market on close orders. Like, there's a whole soup of order flow information that has to get digested because everyone's doing the spring cleaning you're exactly talking about.
Yeah. So, and that happens every day. So yeah, I always warn folks, I go, be careful on that opening, man. I'll tell you, that's when, I remember in my market making days, they're going to be a little bit wider until we see which way paper's going. And then we'll crank it down as we get some some direction, right?
So I tend to think, I absolutely agree with that. And so what do you do as a retail person knowing that? I think I love having closing orders, and that's what these bots do, is they have closing orders out there for that overnight leg. So if you have a jerky open, you can get, closed out of your trade, and then the market could zag again, and you've been closed out because you're getting in when, the market's still finding its way. So if you do have some opportunistic trades you can do, like in this case, closing, like the resting orders to take advantage of, like, a blip as, all this order flow is getting digested, I think can be, an advantageous way for retail to take advantage of that.
Yeah, I agree. Okay, now the tough question. You ready? Are there, in your opinion, any pitfalls using these bots? Any, disadvantages, pitfalls, cons, whatever you want to call it? Can you think of anything?
So that's what I'm here for. That the bots alone have, need to be managed. That, like, it's not only the issue selection, that's something that needs to get updated over time, but options expire. You're short puts, you're short a put spread. Sometimes it lands in between them. How do you manage delivery of stock? I think there are some edge cases where closing only, or closing early, I should say, is a good strategy. Being willing to pay up to 10 or 12 cents instead of a nickel because something feels fishy here. So a lot of that stuff is some of the catches of automated option strategies. But that's what the advisor's here for.
Yeah. Yeah. Okay. Interesting. So not really a disadvantage or pitfall. It's just, it is what it is. Sounds like.
Yeah. You're short a put spread. Like, do you want to close that, or do now maybe it's a wheel trade, and so you are buying that stock, and that is the desirable thing to do. But there are definitely decisions that can be made to improve the strategy along the way.
Yep. Okay, cool. All right. So Mark, tell the folks how they can get a hold of you and use your services. I'm sure for a fee. You don't have to tell the fee, but how can they get a hold of you so that someone interested in investing with you can do it? Well, give them the details.
So you can just head on over to my website that I've got designed specifically for this. It's HF, as in Harvested Financial, client.com.
HF Client. Luis, if you could throw that across the screen quickly, if you know how to do that, that would be wonderful. HFclient.com.
And we
Phillips
of Harvested Financial, and the Peakbot folks, and of course Tradier. So you'll be opening, or I'll be opening on your behalf, an account at Tradier and setting up a bot portfolio.
Awesome.
So we typically start, a recommended minimum is like a $25,000 account to be able to have the right diversification amongst, different tickers and different, strategies. But we can go as low as 10.
Great. I love it. I love it. It's on the screen now. HF. It's H as in
Harvested.
Ola. It's actually H as in hotel. F as in foxtrot. Client.com. I tried to memorize the military call signals, and I got them all. And sometimes I forget hotel. That's the one I forget all the time.
I always would say Henry on the floor when I was doing stock tickers.
Yeah, but it's a good one. All right, so that's where they can find you. Good. Awesome. Before we go, let's shift gears real quick and see if we get a little audience participation on this one. You ready? You don't even know what I'm going to say.
I have no idea. This is foreign.
Foreign. Okay.
Live television, everyone.
Yeah, live television. Here we go. Here's the scenario. I'm going to set it up for you. Do you know it's about sports betting, which is also related to options trading in a way, okay? So a parlay is you pick individual legs, and you can have two game parlays, 3 game, 3 to 5 legs, 6 legs. So a close person to me had an 8-leg parlay. Okay, 8
Did you
legs.
read about this?
I did. 8 legs. This person hit 7 of the 8. It's NFL football, right? And it was midday Sunday, 7 of the 8. It was a $20 bet. If he hit the 8th one, the $20 bet would cash in at $10,000. Okay. At 3 in the afternoon after those games or during those games, when he hit the 7th one, his buyout on $20 without seeing the eighth leg that Sunday night was $3,400. Do you take the money and run $3,400, or do you push it for the 10,000? Now here's another detail. The last bet was Devontae Adams scoring anytime in that New York Jets game. If people don't know football, Devontae Adams was just acquired by New York. Aaron Rodgers is the quarterback there. They played together at Green Bay for a long time, so the synergy was there. They're probably going to target him. I'm talking up the decision, I think. If you have a thought on this, throw it in the comments if you have a comment. Otherwise, email me at lex@tradier.com and let me know your thoughts. Mark, what would you do?
This is too bad that I'm not enough of an NFL fan to know what the result of this is. So I don't know what ended up happening. But I think from a personal risk management, I'd look into hedging it, right? Like see what you can get in terms of like,
not scoring, the opposite.
Exactly.
So we looked at that, and guess what it was? Not good. The numbers were terrible. So
they were very expensive.
A $3,400 bet probably got you $1,700 back. You get your $3,400 and you get $1,700 more. So if you're wrong, you're getting $1,700 versus cashing out at $3,400. That seems like a better deal, cash out.
Yeah.
Yeah. So we did look at the hedge, which is the best answer. So for folks, watching this, that's how we think. How am I hedging this? How do I lock something in? So if you could do that bet, right, and lock in that money, you have a $6,700 or $6,600 upside on that one. But we didn't get it.
Okay.
Yeah.
Well, yeah. And that hedge isn't just expensive because you had the parlay on. That's just an expensive hedge.
It's just the way the numbers work for him scoring, or not scoring, I should say.
Yep.
Yeah. A tough one, right?
It's a tough. Well, yeah. I think I would take the money and run.
That's what I think too. And
like you already took $3,400. Why are you getting greedy on this?
Yeah. I mean, it's a $20 bet. I get that. And it's a 33% a third sort of payout on the 10,000. And my feeling is that if you take that 3,400 and Devontae scores and your opportunity of 6,600 is gone, at least you still have 3,400 in your pocket and you feel bad, but you don't feel 100% bad versus the other scenario. You did not score. If you take the full 10 grand, you lose. You don't lose everything. You lose your $20. But
you lost $20, but you lost 30.
You lost 30. That was in your pocket, 3,400.
Yeah,
so
absolutely.
Now you feel doubly bad. I don't have 3,400 and I don't have 10,000.
Exactly.
I think I like the 3,400 too. That's my answer.
Regret minimization.
Right. If you're not going to comment here, send us an email on that one. Tell us what you think. All right, Mark.
Is that what you did? Or what did your friend do?
My friend, he rolled the dice and went for it all.
And did he score a touchdown?
No, he lost.
Oh.
Yeah. No bueno.
That's tough.
I know. Anyway, what are you going to do? That's the game. It's risk management. That's what I would say. And I like the first thought, hedge. Perfect answer, right? You can't say it enough. Have a hedge.
Yep.
You have no edge without the H.
That's absolutely.
That's
we always used to say the opposite. Why waste the edge with a hedge?
Right. That's right. That's funny. All right, Mark. Good show. Look for Mark though at hfclient.com. Sign up. Be happy, and you'll get to use some bots, right?
And you'll be able to read my upcoming blog about the rise of the bots and why this is just a natural extension of, like I said, what Lex and I used to do back in the day.
That's right. I love it. I'm going to go bots too. You watch. We'll have some more info on that down the road.
I'll have you as a bot convert. You're not far.
Not far. I'm close.
Absolutely.
All right, man. Have a good weekend. Good to see you. We'll have Jason next time, we hope. And we'll
see you.
Yep.
Happy trading, everyone.
Happy trading. Bueno.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.